In July, job cuts fell 8% from the year prior, hitting their lowest point in 11 months. That's according to a report from Challenger Gray and Christmas. Though eliminating jobs is on the decline, workers don't necessarily feel more secure in their roles. Companies are increasingly turning to employee reassignment, or so-called quiet cutting, as the Wall Street Journal put it. A person wakes up to find their old role is gone, but they haven't been fired. Now, as the labour market cools, employees are finding themselves with less external options. Joining me now is Andy Challenger Great and Christmas Senior Vice President. Good to have you on the show here. So, for people who aren't familiar with this quiet cutting or this reassignment, lay that out for us and how that tends to show up in jobs reports.
Yeah, I think that is a potential cooling and weakness in the labor market that's not being picked up in official data. We know the trend is that the labor market continues to cool, but we've also seen layoffs officially announced really fall off over the last few months. That might mean we're coming to a period of stability where companies are really in balance and not going to continue to cut. But it's possible that some of that cooling of the labor market is just transferring to this activity of employees being reassigned within their companies instead of officially laid off.
So then, as we look at the pace and the distribution of some of these job cuts and some of this reassignment, what does that tell us about the health of the labor market then?
Well, when we look at the labor market broadly from a lot of different angles, it still looks pretty healthy. We're still at 3.5% unemployment. There are still plenty of job openings, but the trend for a number of months now has been a continual slow cooling of the labor market. I think, are at this point of a little bit of calmness after 3 years of really intense volatility, huge cuts in 2020, straight into the most serious labor shortage the country's seen in many, many decades. And so this moment right now, where all of the signals are starting to become a little less volatile, could be a moment of calm, but it could also be a calm before the storm.
And looking at some of this Challenger data, so far employees announced plans to cut 481,900 jobs. That's a 203% jump compared to what we saw in the first 7 months of last year. So talk about the industries that are seeing the deepest cuts and perhaps what that writing on the wall means for some of these employees in these industries.
Yeah, for the first 6, 7 months of this year, we've seen really dramatic cuts, especially compared to the year prior, where we were still in the depths of a real labor shortage. Where we're primarily seeing the cuts is in tech, healthcare, real estate, finance, tend to be higher paying white collar jobs. They also tend to be in areas of the economy where we saw a flurry of hiring over the preceding 2 years. Maybe companies getting a little bit out ahead of their skis, maybe coming back down to earth a little bit as the economy has cooled. And as we've seen that some post-COVID reality is coming into full focus.